So for those of you that are still joining, we see a lot of people coming on and joining right now. My name is Josh Schneps. I'm the publisher of Brownstoner. And today's topic is all you need to know about mortgage financing. And with us, I want to introduce our sponsor and obviously the keynote speaker of the webinar, Barry Koven of Loan Depot. Barry, thanks for being here. We want to thank all of you for taking the time to be here. We're going to have an informative session. We're going to discuss everything that comes along with mortgage financing in Brooklyn and beyond. We're going to go through a whole series of questions with Barry and hopefully touch on subjects that are of interest to you. But we know that each one of you probably have individual questions. So again, I want to share that you can ask questions in the Q&A in the chat function at the bottom of the screen. But Barry's contact information will be sent to all of you. And I'm sure Barry will be more than happy to set up one-on-one conversations because a lot of this comes down to personal finances. And that's what he's here for. He's here to give you all the information you need today on the webinar, as well as into the future. So again, after this, we will be sending out his contact information, but please ask questions. But let's get started. Barry, again, thank you so much for being here and taking the time to be on the webinar.
Thank you. It's great to see you again. And thanks everybody for coming on. It's great to see everybody.
So everybody's been dealing with this crazy pandemic that we've been going through the last year. But I have to say, you know, in Brooklyn, it seems the market is held pretty strong and interest rates are like at historic lows. And I assume that that's really kind of helping the overall market and people, you know, having the opportunity to buy right now.
Absolutely. The positive side is that we are at historically low interest rates. So there are people buying. Now, as we all know, some people with the pandemic chose to flee the city. Maybe they thought they, you know, wanted to have a backyard or something. And that's fine. And we've been helping them with their, you know, mortgages outside. But there's a lot of activity in the city. People are here, they're staying, and a lot of mortgage activity. Some people are saying, hey, you know what, I want to make my home a little bigger. And we're utilizing the renovation loan to do that as well. A lot of activity. And then homeowners are taking advantage of the low rates and refinancing to put themselves in a better financial position.
So Barry, why don't you share a little bit about yourself? You're a mortgage originator, a branch manager, and a renovation financing specialist. So, you know, everyone should know that he really touches on all those different subjects. But if you could share a little bit more about you as a person and your role.
Okay, sure. So, yeah, so my role is, as you said, I originate mortgages. So that would be for anybody purchasing or refinancing a home. And I also am the branch manager here in the Brooklyn Loan Depot office. And I do have a whole team of people here that I oversee and report to me. And then in addition to that, I have been known here as in our area as the go-to person for renovation loans for many years. And, you know, we can get into the details of that as well. Me personally, I'm in the business 15 years. I have a wonderful family, grown kids, one in college, one's done with college, and I really love helping people achieve, you know, fix up their homes or achieve their dreams of home ownership. It just gives me no greater pleasure than helping people get their financing in place for their homes. Yeah.
So let's talk about the first step. Someone's looking to buy a home or to refinance. What is your recommendation, or how does the process get started?
Yeah, so especially now, and the market has changed a little bit, you know, over the past couple of years. The ultimate thing that you want to do is you want to get pre-approved. Whether you're buying a home or even if you're refinancing, getting a mortgage is not an easy thing to do. And there are many reasons why somebody may not qualify. Maybe one of the larger reasons is people who maybe you're self-employed and your accountant's writing everything off. Well, in mortgage world, we go by the net income for self-employed people, not the gross. So that's just one example. But my point is getting pre-approved is going to be your first step. So you know what you could do. And then you, with that pre-approval letter, you can go out and show the realtors and find your property.
And I imagine, yeah, you really want to be able to know what you could afford before you go out. And it seems like when you find something you really want, you want to be in a position that you could pull the trigger and execute on buying.
Yes, it's very, in today's market, there is so much competition. There may be multiple bids on the same property. So when you're ready, you have to be ready. So you want to do the pre-approval. Now, I see somebody's chatting up a question there. How long does a pre-approval last? Great question. It's 4 months. And then really the only reason it doesn't really, the reason it expires in 4 months is because the credit reports expire in 4 months. So it's just a matter of once you're working with me, if you haven't found a home in 4 months, it's not a big deal. We just update the system and give you a new letter. But officially, pre-approvals expire in 4 months, and that's the answer.
There's another good question right here, and we're going to get to we'll try to answer everybody's questions, but we'll try to keep it in track with the questions that are being asked. Because here's another one in regards to locking in a rate. At what point can you lock in a rate? Because again, maybe you want to also mention just historically where we're at.
Right. So rate locking, that's a great question and such a hot topic. Obviously, that's what I'm talking about every day, almost most of my day is, hey, when can I lock my rate? I found my property now. What do I do? When do I lock the rate now? So it's your choice when to lock the rate. Now, of course, I'm happy to help and provide any kind of education and financial information or economic information to try and help you make that decision. But you could lock in the rate anytime you want, from when you find a property, when you go into contract, to about a week before closing. And the whole process, if we're talking about New York City, a typical buying a home process is about 60 days, about 2 months. So it's your choice during that time. So you want to kind of know, well, our rates are going up now, right? So you may want to lock sooner. And you can do that. It's totally your choice. Now, but 6 months ago, rates were trending down or at least staying the same. So most people were starting the application, but not locking because they thought, oh, wow, I heard rates are going to go down a little. So, but ultimately, it is your choice when to lock the rate. It does not happen automatically. It's not, when you put in a loan application, it's not like, oh, now my rate is locked. It's a separate part of the process that you have to let me know you want to do, and then we lock it in.
Let's talk a little bit about the differences between different types of properties when it comes to financing, right? Because Brooklyn has everything you can imagine. You have co-ops, you have condos, single family, the multifamilies. So talk through what people need to know between those different types of properties.
Yeah, great question. So we're a very unique market in New York from the rest of the entire country. So number one is you don't want to work with people from other states because they may not know the complexity here of our situation. We have co-ops, which is not even real property. There's no title, there's no deed. You're buying shares in a corporation, and we have to get you what are called recognition agreements, and then you have to potentially go for a board approval. So, and the co-op, the building itself has to be approved. So really the local expertise is important. Same thing with the condominium. The building itself has to be approved. And there are different things you have to know. Maybe it's a new construction condominium where many different rules are going to come into play. Do they have 10% reserves in the budget? What's the owner occupancy? How many people have bought into the building? There's so many local things you have to know. And even on what you might think is just a regular 1, 2, 3, 4 family home, very unique in New York City. There could be a title issue. There could be open permits. Somebody did some work. They built a deck in the backyard without getting permits. You have an illegal deck. It may not pass an appraisal. You really need a local expertise when you're buying a home or co-op or condo in New York City.
Well, let's talk about the best kept secret in the mortgage industry, right? Which I think you've been known to say. Give us what renovation loans are all about and why someone might be interested in one.
Right, sure, sure. And I do keep it the best. I do call it, and I think I coined the phrase, the best kept secret in the mortgage industry is renovation loans. Some people may know them as the 203K loan. That's the most popular one. Some people actually call it, say, oh, hi, I get these calls every day. Oh, hi, I want a 203K loan. But that's like calling tissues Kleenex. That's the most popular one, the most popular brand.
Okay.
But we have several renovation loans depending on your needs. So in short, and I teach continuing ed on renovation loans, and it's like a 2-hour class, but to get it down to 2 minutes, a renovation loan allows you to include the money to fix up the home. If you're buying, it's either for a home you own, or if you're buying a home, you can take the purchase price. Say you're buying a home for 800,000 and you want 100,000 for renovation. We're going to combine it into one loan. So it's an awesome, awesome product that most people don't know about. If you walk into a home, you love the home, you've saved up your 10 or 20% down, but you don't have the money to fix it. And the home, the kitchen is from 1970 and the bathrooms have the pink tiles and maybe there's a leak in the roof. Well, now you can take your 800 purchase and 900 and 100 for renovation. That's 900 altogether. And then if you've saved up, say 10% down, you put 90,000 down. We give you one mortgage for 810. And at the closing table, the seller gets their 800, they go away. And now you have 100,000 to put in your new kitchens, bathrooms, roof, whatever you need. And it's all inclusive in one loan. So it's an awesome, awesome program.
How about interest rates? How are those impacted?
Great question. Interest rates are all about risk to the lender. So interest rates, are based on how much down payment are you putting? Is it going to be an investment property or you're moving in? And in the case of renovation, that is to the lender a higher level of risk, right? They're potentially financing a house that may not be habitable under complete construction. So there is a rate adjuster. It depends on your personal profile, but in general, it's about half, 3/4 of a point higher. So if the prevailing interest rate was 2.99, the renovation loan might be 3.625 as an example. So it's not horrible. It's not 9%, but it is a little bit higher. And it is remember, it's one loan. So it is on the entire loan, not just the construction portion.
What is a non-bank lender and what advantages do they offer?
Yeah, so I was at the big box bank for over 12 years. I came to Loan Depot about 3 years ago and have never been happier and have never, been able to provide more products and programs to my customers and to help everybody. So a non-bank lender, which Loan Depot is, and we're the second largest non-bank lender in the country. It just means that we're not like the big box banks. We don't have retail stores. So you don't see us on every corner. I have an office here on Atlantic. I happen to have a storefront on Atlantic Avenue, but I'm in the minority. Most of our offices, and we're in every city and every state, but most of them are just offices because we don't have tellers and checking accounts, and we're not in the depository business or the investment business. We're only in the mortgage business. But we are a bank. We're a $1 billion company. We close and fund loans in our own name and service them. You pay Loan Depot every month, just like you would if you went to Citibank, Chase, or Bank of America. Again, the difference is, number one, we're only in the mortgage business. And number two, then this is huge. Besides 70 or 80% of the loans that we do, if you come to me, you'll most likely be with Loan Depot. But I do have relationships with about 15 other outside investors that we work directly with, not like a mortgage broker. I'm talking direct relationship. So if you have a very interesting or need a specific product or program that maybe I don't offer directly with Loan Depot, I can go outside. Maybe you want, an example would be, maybe you need to do a loan in an LLC, or you're a foreign buyer, or something that was unique, or you're buying a condominium or a co-op that's non-warrantable, that won't meet the guidelines to get a traditional loan. So there are different examples where we can use outside investors as well. So it's literally the best of all worlds. I can pretty much satisfy almost anybody with all the different products and programs as a non-bank lender.
Thank you for giving that information. Good information for everyone to have. I know there's questions coming in. We're going to try to get to as many of them as we can. You'll see that some of them will be answered coming up through. We touched base on interest rates a little bit, but could you be a little bit more specific in terms of where you think interest rates are going and whether or not you think now is a good time to buy or refinance?
Yeah, so look, the interest rates dropped about a year ago, right? In February, started going down. The pandemic hit our, our country, our world, and that's when the interest rates went down. And they were down the entire year. And in the past month, they have started to go up a little bit. So I really honestly can't be so bold as to, predict the future, but they are starting to trickle up. Now they're still historically low, right? I mean, we were able to get people 30-year fixed loans at 2.5, 2.625. I mean, just incredibly low rates. In some instances lower, but so now they've trickled up a little bit, 3/8, half a point. Maybe now, if just like a one family, maybe you'd be at 2.99 or 3, or maybe even 3 1/8. But we're still at historical low rates. Now, this is the part where it gets tricky, right? So I would say now's the time, because if the economy continues to get better and everything starts to open up with restaurants and movie theaters, and the vaccine is out and becoming more available, well, then we're just going to continue to go up. Now, but we don't know, of course, what's going to happen over the course of the next year. But I would say, as things get better and keeping positive, assuming things are only going to get better, the interest rates are going to do nothing but go up. So I would say now's the time.
Good insight. Good insight. There's been a lot of questions on this topic, and I think this is a big thing. What are the options for first-time home buyers and those that are looking to put down less than the standard 20%?
Okay, great question, of course. So there are many options, and that myth, we live in New York City, right? So the property prices are expensive. So many people or households, one or two people working, you're making 50, 100, 150,000 each. There's great income there, but you weren't able to save up to 20% down. That is really not an issue. So there are programs as low, there's the FHA loan is as low as 3.5% down. There are first time programs with 3% down. We have, if you're at a lower income level, you may qualify for, the state of New York has a program with down payment assistance. So there are a lot of opportunities with less than 20% down, whether it's 3.5, 5, 10% down. Now, when you do that, there is mortgage insurance, right? It's called PMI, but we also have no PMI options. So, I just want to, give the big answer. There are opportunities, first-time homebuyer opportunities for less than 20% down. But for the details and specifics to your scenario, you should reach out and, get in touch with me. But they're out there and it's available.
I mean, that's why you need a really good mortgage broker, because it's very specific to everybody's loans and I guess financial situation, which brings me to the next question is, what do lenders require from buyers specifically when they're going through that approval process? Like, what should they expect to prepare?
Yep, good question. And also real quick, I just saw somebody said, hey, what about a VA loan? So yes, again, here I have almost every product and program available. VA loans, if you've served our country, the VA has a loan where you can buy a home with zero down payment. Yep,
Wow.
100% financing. And yes, I do provide that. Just as a little side note though, even though we can get you 100% loan, you have to be careful if you're going to bid on a house and you tell the seller you're putting zero down, but there's 5 other people who put in offers and they're putting 10, 20, 30% down. It's going to make it a little tough for you, just to be real and honest about it. But yes, we have VA loans with no down payment. If you've served our country, that's one of the rewards, and please contact me on that. What's needed? So look, getting a mortgage, just to be, straight and candid about it, it's not fun. And it requires a lot. They want to make sure they're lending you 3, 4, 500,000, $1 million, $2 million. They're going to do their due, especially after the mortgage meltdown in 2008. The underwriters are doing their due diligence, and they're going to really scrutinize all of your documents. You're going to be asked for a lot of documents. So just don't get frustrated. Just, know that that's the reality of getting a mortgage. So you want to be prepared with paychecks. If you're a salaried person and you have a W-2, a regular job, it's paychecks, W-2, and bank statements. And that's definitely going to be easier and less document intensive than if you're self-employed. Then you're going to need the whole 2 years of tax returns, business tax returns, bank statements, and there'll be a little more scrutiny there. But at Loan Depot, we are extremely technologically advanced. So when you do my online application, there's a good chance, at least we're up to about 40% now of my applicants are getting digitally verified income and assets. So if you work for a major company and you're paid by a payroll company, great chance that you will not have to reply any documents. We are definitely leading the way into the future of our industry and with the technology and the digital part of it. So you'll know once you do the online application, again, there's a good chance that the paperwork will be minimized and you'll be digitally verified.
And then you mentioned it earlier, but could you repeat the process? How long do you think or expect that this process takes from beginning to end?
So a typical New York transaction is about 60 days. Almost every lawyer, every real estate attorney, almost every contract that comes across my desk usually has a closing date about 60 days out. And that's a typical process. Can we get it done sooner? Absolutely. I had somebody that came to me, they had an issue, they were with another bank, they had a problem, they couldn't close, and they came to me and we got their whole loan done in 30 days. But that's the standard or the norm. But a typical mortgage process from beginning to end, once you get an accepted offer on a home, and assuming you get the contract, your lawyer negotiates and you get the contract, within a week. From the contract to the closing date, I would allocate about 2 months.
We talked a little bit earlier about how interest rates could vary, particularly, putting a certain amount down or whether or not you're doing renovations. How can you get the best interest rate possible?
Yeah, so it's important to really understand and know that, because, people, of course, they call me up and, hey, I saw on the internet, the rate is this, and, it's this percent, or my friend got that percent. Interest rates are really, really unique and individual. And what you want to do to get the best interest rate, a big factor is your credit score. You want to have great credit. And the way to do that is to have a long credit history. Don't close or open any accounts. Keep things the same. Never be late on a payment. And and again, that history part, I believe, is one of the biggest factors of your score. So if you have some credit card that you've had since you were in college, 10, 15, 20 years ago, and even if you don't use it, do not close that account. It's so important to have a long history. You want to have at least 3 trade lines, whether it's credit card or a student loan or a car payment. You want to have 3 things on your credit report, and you don't want to have high balances. So all of that will help keep your credit score up, is going to be a big factor. And then there are going to be things that are just out of your control. I mean, if you're buying a multifamily house, the rate might be a little higher. You can't control that you're going to buy that house. But all of those goes into the rate. Credit score, what type of property, how much down payment. If you can put a more down payment, you might benefit from a lower score, and so on.
We're going to get into some specific situations when it comes to financing. So we're going to walk through some different questions so that way everyone has a bunch of different scenarios. There's all different scenarios that are being asked in the Q&A and chat, and please feel free to continue to ask away. But why don't we touch on, I saw a few on retirees in terms of, people that potentially, I assume, have lower current income streams coming in. What can you say about that?
Okay, sure. Yeah, great question. So getting a mortgage is based on income. So that can be challenging. So if you have Social Security, if you have a pension, if you're in a multifamily home, maybe you have rental income, then we're going to use all that to qualify you for a mortgage. Now, if you really have none of that, and you literally have no income, no Social Security, no pension, no tenants, it's going to be challenging. Now, that's where the advantage of working with me and the non-bank lender can come into play. So we do have several different options that don't require income from your tax returns to qualify. One of them might be, we have a asset depletion. Maybe you have no income, but you have a lot of assets. We will quantify and amortize your assets, and that can replace income. Or we have, for self-employed people who may not have a lot of income, low income on their tax returns, but their business is flourishing. They're actually making deposits into their bank account. We can actually, it's called the bank statement program. We could actually use your deposits for self-employed people. And self-employed is not just a person who owns a retail store. That could be a consultant or a realtor, or somebody in a 1099 category. Again, if your accountant's writing everything off, low income on the tax returns, we may have some special programs for you, and that could include retirees. So again, just, call me and let's go through the scenario.
Let's talk through a situation where someone wants to tap into the equity of their home, either for investment or for repairs. Would you advise in that case to use a renovation loan or a home equity loan or a cash out refi? What's the recommendation there?
Yeah, so those are the 3 options, right? Either a cash out refinance is where you're going to add whatever your current loan balance is, or maybe you have no loan, and then we're going to give you the actual cash. You're going to get a check at closing for the new mortgage amount, right? That's one. Another one is an equity line of credit, where we're going to add on a second mortgage. You have one, now we're going to add on an equity line as a second. And then the third is the renovation loan. They all, again, it depends on your scenario. You really need to call me for a consultation. I'm going to tell you which one is best for you. Now, real quick, I can tell you a renovation loan would be better, for example, if you don't have equity. So you own a home, it's worth $1 million, and you already have an $800,000 mortgage. Well, there's not a lot of equity there, so you can't do a cash out refinance, and you probably can't get an equity line either. But the renovation loan is based on after repaired value. So if the home right now is maybe valued at $1 million in its current condition, but after you do all the repairs, it's going to be worth 1.3. Well, the renovation loan gives us the advantage of doing, even though we're doing the loan now, before you start the work, it's based on the future value, what it's going to be. So if you have no equity, renovation loan's the way to go. If you have a ton of equity, it's either going to be cash out or equity line. And then we're going to talk about, well, what are you using the money for? Cash out advantage is it's going to be fixed, locked in forever. Equity line is like a credit card. You use what you pay for and you could use it, pay it back, but you're going to have fluctuating monthly payments and that may not be comfortable for you. We'll go through all that and, again, just call for a consultation and we'll figure out which one is best for you. And they have different rates also.
What about somebody that wants to buy a second property to rent out? What can you say in terms of the lender requirements in that scenario?
Yeah, so buying an investment, real estate is a great investment, right? Over the history of the world, real estate has done, nothing but go up, especially in New York City. I mean, of course, with the exception of a few years here and there. In general, it's gone up. So if you want to be an investor and buy an investment property, we can do that. There's no low down payments for that, depending on the property type and the and how many units it has. It's going to be a minimum of 15% down, possibly more. So then that's where we could talk about maybe doing an equity line from your current home, right, to get the deposit. But investment properties are great to do.
So a lot of times people are looking around for new homes before they've actually sold their existing property if they're a current owner. So what options do they have if they find that dream home that they want to buy, but they have not yet sold their current property?
Yep. So there are options. We do, again, it can be a little individual, but some of the options are you can, well, maybe you qualify for both and then, it's no problem. We buy the other one and then you sell the other one. Another option is maybe if you need the money from the existing home, we could visit one of those other things we've been talking about, cash out refinance or an equity line if you need the money from it because you're going to buy before you sell. There's also, in some cases, there are bridge loans. Those tend to be for the higher priced jumbo mortgages, but there are options for that as well. So there are several options. We do them all the time. Very common, of course, that somebody's moving up. They started in a 1-bedroom. Now they have
Haven't sold your home. That's where we left off. My next
Right.
question is about buying in a condo. A lot of people are interested in buying in condos. Are there any special requirements or considerations?
Yeah, so we touched on a little bit before. When you're buying a condominium, the building, your attorney is going to do due diligence on the building. So it may be if it's new construction, there's going to be there's a pre-sale requirement. So if it's a new building and there's 50 units in the building, in general, there's a 50% pre-sale requirement to meet the government agency requirements of Fannie Mae and Freddie Mac. So you're probably going to want to just make sure that if you're buying in a new building, you're going to want to make sure that there's activity in the building, other people are buying there. Otherwise, it's going to take a long time to close and you're going to be waiting on the developer to get their TCO and have their offering plan declared effective. And there's a whole lot of things that go on with the new condo. So again, just have a great team. You want to have a great realtor, a great attorney, and of course, a great mortgage banker like myself who's experienced with that to get you through. Now, if it's an existing building, it's no problem. It's like buying a house. You're going to have your own title deed. You own the apartment, and we'll get you the financing going for that. No problem.
There's been a few questions here. Does it matter where the lender is located? And obviously having experience with a particular property type or loan type.
Oh, absolutely. Absolutely. If you're buying in New York City, it's a very unique market. There's no other place like New York in the entire country. We have co-ops they're not even real property. You're buying shares in a corporation and they're recognition agreements, not a title and a deed. So you have to work with a local experienced professional or you're going to have major problems. Same thing with a condo and those issues. And even if it's just a regular 1, 2, 3, or 4 family home that you think is just a regular house, there are unique things in New York. Maybe they built a deck in the backyard that's illegal and has an open permit, or there are violations on the title. These are all things that you need local expertise, especially in New York. If you're outside in one of the other states, it may not be as important. Maybe you could just use some national online mortgage company, but not in New York City. You absolutely need local expertise and want to work with a local expert here.
So I have one more question, then I really would love to hop into some of these other questions, Barry, if you have time. But you talked a little bit about, if there's an issue like legal something in the house. I mean, there's so many historic properties, old properties, people have lived in them forever. Will a lender mortgage a property that may have issues like bars on a bedroom window or an extra kitchen that may not be legal? What do people have to be aware of when it comes to that kind of stuff?
Yeah. So what you need, again, it's just could not be more important to be working with somebody with the local expertise. So the bars on the window, it could be an issue. It just depends on, when were they installed? When was the property built? What's the year? There's so many different factors that goes into it. What does the appraiser say in the appraisal report? Does the appraiser identify like, well, this is a health or safety issue, that if there's a fire, there's no way to get out of the home? Well, then you're going to have to possibly install safety latches on the bars in order to proceed and get to the finishing line. But it all comes down to also when you do a title report, there's municipal searches where a lot of those, maybe there was a crack in the sidewalk in 1982, and there's a violation on the title. And with some lenders, that could be a problem. Now, again, with me here at Loan Depot, we don't require municipals in our title reports. So that would not be an issue for us. So again, keeps going back to working with the person with local expertise to overcome those issues. And in most cases, we can close either, but depending on the specifics of the issue.
Barry, thank you so much. I want to move in to answer some people's questions here, and please continue to ask through the Q&A and chat. It looks like there's some questions here, a few of them in regards to financing. When you're doing either a straight refi or if you're pulling out money to construction, when you have that interest rate, how does it work in terms of locking in for a period of time? And how does it work? Is the interest rate for the entire loan package together? Or are you paying one higher rate for the part that's paying for the renovation and the other for the house?
Yeah, great question. So yeah, a renovation loan is one 30-year fixed rate loan. It's one loan for both. So in my example before, you're buying a home for 800, you want 100 for renovation, 900 total. Say you're putting 10% down is 90,000. We're giving you one $810,000 mortgage. So yes, the interest rate is for the entire loan. It is a little bit higher than a non-renovation loan, and it is for the entire loan, and it is locked in forever. It's a 30-year fixed rate loan, just like a regular mortgage. That part is the same. But yes, your interest rate is higher on the entire one loan, not just the renovation portion.
So tons of multifamilies in New York City, particularly townhouse brownstones in Brooklyn. When someone is looking to do a loan and they're going to have a rental portion of it, does that rental typically have to be in place, or is a projected rental income going to help them qualify for a mortgage?
Yeah, so it depends on the loan size. So if we're talking about a standard traditional conforming loan, yes, we can use rental income to qualify. Now, the way that works is if you're buying the home, let's say you're buying a two-family, you're going to live in one and rent out the second unit. Now, if you're buying it with an existing tenant, we can use whatever the current tenant is paying, the current lease amount, we can use that as additional income to help you qualify for the mortgage. If your salary isn't enough and you need that additional income, yes, we can use the rental income to qualify. Now, if it's vacant, that's even better because now we have the luxury of using the market rent, which is probably higher than what a person might be, an older tenant might be paying. And we'll just go by, when we do the appraisal report, we'll ask the appraiser to do a market rent analysis, and whatever the market rent is, we'll use 75% of that to qualify. They have a 25% vacancy factor.
Can you talk to credit scores in terms of the different ranges?
Of course, the highest credit score is 850. And I'm not sure what the lowest is. I've never seen one lower than low 500s, but I suspect they may even go lower than that. But yeah, so, the basic range is like 500 to 850. And a good score is, well, average to good, average is under 680. There might be a slight negative rate adjuster. 620 is pretty much the standard in the industry to get a mortgage. That's kind of the minimum. We can, in some cases, go lower than that, but that's pretty standard in the industry, 620. Some of the big box banks are even more conservative, will require a higher amount. 680 to 720 is probably your mid-range average credit score. Over 720, over 740, and getting up to those 800 numbers, that's where you're going to benefit from the best possible interest rates.
Another question here, an unmarried couple, can they get a loan together?
Oh, absolutely. You can get a mortgage with anybody, can buy a home together. Brother, sister, friends, partners, unmarried, married. Sometimes married people only have one, we only use one person of the married couple on the mortgage. But absolutely, you can definitely buy a home with unmarried. And also, I don't want to say it's popular, but I have over the years have had two couples buy a home together, a multifamily home together as well, have, four people on the mortgage. Yep.
Well, Barry, it's been great having you on. Thank you so much for your time. And again, we will be providing Barry's contact details to all of you because I know each of you have different circumstances and questions, but thank you to all of you for being a part of the webinar. Thanks again, Barry.
Thank you. Thank you so
much. Have a great day. Take care, everyone.
Thank you. All right.